varieties of things that do the same thing the synthetics do. Get into that world. Hit me direct on Skype for that info. I'm not going to jam it out here. It's too risky. All right? And again, it's between you and your doctor ultimately. Okay, so let's go back to how we're going to fix this besides trying to stay out of the medical loop, because when you get into synthetics, a lot of times you have side effects from the synthetics that are cumulative. It might be 10 or 20 years around something. Sad to say, it'll damage you. And they know it, and they'll say it. And the numbers are there anyway. So try to get non-synthetic as best as you can. That's going to help this figure as well. All right, London patterns. We began in this section here last week having taken this away from peak. You can see the inverted hammer, the level 1 condition, right? Extremes at TDI, the 1, 2, 3 up, AFP next day, a non-5200 cross, of course. And we were talking about taking this structure. We got the third leg, pull back. And we brought up this fib thing. And I left this in here because who was it? Was it Chris that was asking me about this, about the fibs? Who was asking me about this, what these fib levels? It was Edgar. Okay, so Edgar, this is for you, just a replay. All right, your fib is going to come up like that. Okay, so what we want to do is ditch the 0, ditch the 100, ditch the 50, and then ditch these numbers because we can just put that in there. But you can train yourself to see this. So fib pullback, again, looks about like that. Okay, 618, park the stop loss above, right? Move it down from the high of the day, start to limit your risk. Again, this is a trader who's specifically trading the second impulse, not the first impulse. We did a whole session last week about that. So this session has to mix in with last week and the week before. It's one continuous little flood of data. All right, we had Ambrose talk about the 618. He closed it out. And then we talked about the fact there was a 0-0 in proximity to that. So that 0-0, he should have been able to weather the pullback to the 0-0 because they'll oftentimes do this to try to suck in capital that's above the 0-0 and then trap those traders and run it down. Okay? Yeah, I would watch this one last week, Edgar. But this gives you the idea, right? General idea. So price is expected to hold generally that 618 to validate that it's going to still drop. Does it hold it? Okay, it pulls back to it. You can see off to the right where we have this, right? You can see this move off to the right. Does it hold it? Does it hold it? Yeah, it does. It gives you an inverted hammer and then dumps down. Okay, so a little group participation here, my favorite part. Let's get into this. So that we just jumped to a 5-minute chart, same setup, right? So top edge, type 1 London pattern, leg 1. Close below, close above, close below, leg 2. Third leg, close above, close below, leg 3. So 3 legs of a type 1 London pattern into the first push down, pull back to the 618, just inside of it, and then it's rolling over. All right, question for you. I'm going to weather this pullback if, fill in the rest. Why would you weather this pullback? And it's a broad question. Okay, so let's say you took this 5-minute entry up here. Beautiful 5-minute entry. You weathered the first impulse. You weathered the pullback. I'm going to weather this whole thing. I'm going to wait for this if what? Why would you weather this pullback? And what is your basis for weathering it? I want to ask this question because I'm going to train your brain. It's going to take us a while, but we'll be here for a while. I don't mind. I've got time. I mean, in terms of not tonight, but in terms of the weeks, months ahead. All right? I'm going to train your brain that you're starting to look at answers to these questions in the wrong place. And this is why the homework is so important. And this is why historical dives, like an algo deep dive, is so important to loop through. Go back into win rates. Go back into how all this stuff transpired. Holds the DOP, holds day open price. That's a nice one. So Michael says holds day open price. I like that one. I'll be looking at the higher time frame, Demetrius says. Yep. If it holds the zone flip, I can see, yeah, there's a zone flip right in here. We can trace right across and see a zone flip. Okay. Dale P, multi-traps, 618 Fibo, higher time frame confluence. Okay, nice one, Jess. Okay. If I have the time. That's a great answer. Whether the pullback, answer if I have the time. Now you're talking. See, that's the answer. I was looking for that type of answer. Oh my God. I didn't think I was going to have any of you say it. You have to know ahead of time what is the percentage of trades that give a type 1 London pattern to play out that runs in the second impulse. I got to know this stuff, right? The only way you can know that is you got to go back and do this kind of deep dive. 48 wins, 19 stop outs, 4 stop loss to break evens, all the way into what? First or second impulse? That's the question. Did you do this in just the first impulse or did you do it to the second impulse? So you have to, for yourself, make that determination. Do I have the time to hold for this long duration to possibly get the move down for the second impulse? And if I do, I want to backtest my London patterns with that in mind. If I'm only a, 3 or 4 hour a night trader, then I want to grab the first impulse, and I don't have the time, then I'm not going to weather the pullback. I'm going to take profit on this first impulse. Very important to determine that for yourself. If you have algo looped it, optimized it, and have a good sized data set showing your expected statistics with your specific signature trade, you've done the work, right? If you've done the work, then it makes sense to weather the pullback, right? So, silly rabbit, tricks are for kids. I date myself with this, but that's just obviously pure sugar cereal there that a lot of us consumed as tykes. But I'm relating this to trading, where you were all looking for a little trick, right? We're looking for, it held the open price. That's good. I understand that. It held the 618. Yeah, did that. You're looking for these little tricks. Now, those are okay, but they need to be backed up with bigger tricks. They need to be backed up with hardcore data that you're able to see. Perhaps an improved signature trade from a previously decent signature trade, that type of thing, right? You've got to know where this stuff is. All right. So anyway, confluences are for adult traders, right? There is no such thing as trading tricks for long-term profitable traders. I actually set up here confluences. I stated that incorrectly, but it doesn't matter. You get the idea. Confluences add up to become a large picture, but there are no such things as little tricks. Okay? And the whole idea of trading education is this very, very difficult task on my side to not get you. I want to get your hand out of the tricks box of cereal, right? Put that down. Get out, your shredded wheat and goat's milk or whatnot, right? Get rid of the garbage, get the real stuff. The real stuff is the whole picture combined. The biggest question being, do I have the time to hold for it? That's such a big question. It's very important that you said that, right? Only marketers push tricks for trading. Okay? So if your system tonight when you're trading, there's a couple tricks, I got news for you. It's going to be tough to get a curve like this. It's going to be tough. You could do it. And I know there's people do it here. They're able to do it for a couple months, a year or so. I know one of my good buddies traded AFP only, but unfortunately I didn't have this scaled waterline matrix ready for that individual when he did that amount of trading. Up to 100 grand, went back to 5. Okay, so the tricks will last only so long, right? Revenge trading, on the other hand, is constantly, we should be on the constant lookout for a revenge trade, but revenge trading, on the other hand, is constantly on the lookout for the next trick to get it all back. Okay, the chimp in your head, and that's a lot like that credit card at 0%. Hey man, or it's 0% now. I don't care that in 14 months it cranks up to 27%. And that doesn't concern me. I want my Oompa Loompa now, daddy. Right? So you got to get your brain wired straight to get out of that type of mentality, and trading is going to immediately throw you in that. Trading is the quick fix. I want to get it now, and I'm going to look for that trick. That's good. No. You want to have more than tricks. You want hard data. And again, I'll show that screen again, but you have to work for it. Okay, so you have to work for it. You see where the trades show up. All right, it's just so important, this stuff. There it is, right after. I'm glad I put that one there. Okay, so good things come to those who get stuff done. And I don't want to. Let's just move on to the next section. I don't want to overbear that too much. Okay, take profit ideas. So now you're in this second impulse. We spent 3 weeks walking through one type 1 London pattern because I got a lot of email, or rather, I don't like email. I get Skypes that say, Jim, give me a session on type 1 London patterns. Where can I find one? And I've been showing London pattern type 1s basically for 3 or 4 years now, pretty closely. And so it's all over the place, but I wanted to make sure there were 3 solid sessions. This turned into 3 solid sessions about that. Okay, so asking you now, folks, you see a type 1 London pattern with a third leg, gives you the first impulse, come back, give you the first pullback, right? Which is the first correction. Now we have the move starting, presumably, to the second impulse. What are you holding for? What are your take profit ideas? What is it? Type it in. I want to see what you think here. Nice. Huh. What's up, Mike? Mike's in the house. Aloha, my brother. All right. So, based on pair averages. How about that? Would I base my take profit on pair averages? Wow. It's an advanced thought. Who would possibly think that? I mean, how far is this second impulse rather? Typically, do you have in your database, do you have a collection of distances of the move from first impulse, first correction, into the second impulse? Well, that sure would be nice to have that data. They say, it's GJ. In the historical review here, well, Jim and his buddies actually added a tab down here that said, well, we can measure all those for every single trade. We can measure the impulse distances. Oh, that's nice. I can average that out. I can get a simple average of impulse 2. Well, that's kind of cheating, isn't it? Well, if I have that data in my spreadsheet, that's not cheating. That's smart. All right? So there are other technical things I want you to think about. Okay? And that was a good answer. But there's something else in here I want you to think about. Any pair that sets up this clearly, the dealers are heavily invested in. 1, 2, 3 up, peak formation, close at the stream of the structure, right? Gives you a safety trade the next day. Where might it go? Let's just ask it this way. Give me a sense of if you wanted to put your take profit far out, where is a really simple place to stick that take profit to catch possibly the largest run? Say this is in the top 10% of impulse 2 moves. Let's say you've got all this stuff worked out and you're able to say, oh, impulse 2 is X amount of pips, maybe, in front of, not quite to this next waypoint that we should all be thinking about when you're putting a take profit in the market. Like say, for instance, Noma. Okay, she's up in the middle of the night here. She gets in the trade. She takes half down here. She's holding the second half, but she's got to get some shut-eye because she wants to take the kids to school. And she's on the way taking kids to the school. Where does she want to put her take profit for the ultimate run? Let's say this thing just does a mad shift. It just blows out. Where would you put it? And this is a real simple one. I'm hoping someone sees it. And I did a whole London pattern check down sheet for this. It was actually, a London pattern? I don't know. It was way complex. But there was a whole section at the bottom of that London pattern checklist that had the take profit section. It had you looking for things. Okay? All right. Getting some answers, still not it. All right, the first one, obviously, this is the most important answer right here. And I got no one typing this one in. Mike was close on the time thing. But take profit target ideas. How about my algo tested win-loss ratio as a target? Try to do the finger pop. There, it worked. Oh my God. Didn't expect that. I better have a clean finger. I play with dogs a lot, so I probably don't. Anyway. You get what I mean here. I want to know what my win-loss ratio is that I've been studying since the beginning of the time I looked at this trade because I want to constantly trade my win-loss ratio in this thing. All right? And that's something that, you're not going to get out of an indicator. You're not going to get out of, it's hard. What is a win-loss ratio? It's the stop loss above, your entry below, and it's grouping that together to see where 2 to 1 is, where 2.5 to 1 is, where 3 to 1 is. And then when you wrap this into your trade plan, when you've got your trade plan nailed down, I know in the bounce group, those guys are doing 1-to-1 because they have an 80% hit rate on a lot of this stuff. That's cool. That's a 1-to-1. They've got that nailed down. Some cases 2-to-1 is the way to go. Some cases 3-to-1 is the way to go. Right? I've seen people who do the work gradually work their way into a fixed reward risk ratio, and that's what is their take profit rule. End stop. Period. Right? No discussion. All right? So think about that. You've got to develop for yourself a win-loss ratio. It depends on where your stop is. Okay? All right, but generally speaking, list out the possible take profit areas you see, which you've all done. Like that one. Okay. That's a correct one. I only see one person answering this one correctly. That's all right. It's not necessarily a correct answer, but there's something on our H1 chart here that gives us a sense of where the termination point of a big type 1 London pattern, for lack of a better word, a safety trade, in line with L1 might go to. What is that on the H1 chart that's sitting there that gives you a sense of where this is going to go? And I'm actually sad I'm not seeing anyone type this in. T-time's a great answer. Not quite. ADR. Oh, finger pop. Oh, man, I forgot about that. That's always a key place to look for. Trades to terminate to. Because in a sense, this is similar to the answer of impulse 2 distances, which is part of the answer, but not the complete answer. This oftentimes is relevant because that's an average, right? Last 14 days, the range of this pair has put us into this being the top and this being the bottom of the range, right? So top of the range here, bottom of the range here. Okay, let's walk it through. Okay, more questions to ask the group here, deep in our DMR session. Channeling away from trap highs in line with the highs, okay? So I should have asked this question. Why stay with this target lower? I don't need to because I already showed you the answer. Okay, you got the idea. So let's just think about it. Let's just leave it here for a second. And again, if you don't have your win-loss ratio solidly worked out and your statistical edge worked out through countless hours of filling in these little pretty boxes, you're not going to have the what would we call it? The tenacity, the chutzpah, the cojones, the stamina, the maturity, the confidence to hold through this nasty chop. It's not doing it for me yet. Oh, these are so hard to stay in if you don't have a reason to stay in it. Absolutely just torturous to stay in this thing. It's hours at this point. Your last hope, of course, is a move down into tea time. But statistically, it does it a certain amount of the time. So this becomes a question of your statistics. Okay, so we're going to, as best as possible, drag you into that world. Kicking, screaming, barking, whatever it takes. That, I think it's more than 10% in our group, thank God. We're talking 30 to 40% from my initial just digs into this. How many people are sending me algo work and really digging into this and asking, Jim, where do I find this? Where do I find this spreadsheet so I can log my trades, right? People have asked me about the algo loop, how do I do this? Show me where it is on the form. Where can I find this? So it's getting up there. It's like 30, 40% now, which I'm really happy about. All right, so channeling away from trap highs in line with the kill shot, right? This is your kill shot. Now remember, it's a big picture thing. So let's go back here. I'll just walk you through here. 9, 10 a lot of times. I know I'm a little selfish, but I'm waking up right now. So this is part of my morning. I like to have my coffee while I talk to you guys. Okay, I'm not embarrassed by that, but I oftentimes will ask the question and then mute the mic and then watch the answers. But let's just throw in some hypotheticals here. Pardon me, my stuffy nose. Why stay with this target? Why stay with this if your target is lower? You're going to get really bent up in a lot of technicals down here, which is good. You want to know technicals. You want to know all this kind of stuff. But one of the answers is what's happening on the H1 chart. One of the answers is a big picture item, which is you're in the kill shot, dude. You're in the kill shot that's going to most likely shift against these higher level longs that have margined out. They've taken the 0% interest rate on their credit card and they maxed it out to be able to cover their expenses. And this is the 12-month period where the credit card company's cranking it up to 28%. Right? This is the same thing in a smaller time zone. Okay? So channeling away from trap highs, that's the big one. But it's the factor in line with the freaking kill shot. Right? That's the big deal. So it starts to drip out of there, it drips out. Now you're down into tea time. That's really, really precious. So let's consider for ourselves the scenario that we were looking for an M15 entry on a type 1 London pattern based on the M15 entry rules, which we laid down 2 weeks ago in the DMR. Close above, close below, close above, close below. Allow the third leg, close above, close below. All the things we showed you about holding the zone last week and now into this week. Spent a lot of time in this segment. Now we're into this final move. Okay, where was your initial stop? My initial stop was up here and my entry was here. Maybe my 2-to-1 has been hit in this location. 1, 2. Okay, so you say to yourself, oh my God, that's a long time to be sitting for a 2-to-1. Well, let me just present this little piece of metadata to you. Let's consider this guy. Let's say you're up to this top milestone 5, and you have a 3% trade on this puppy because you built your account. You started at $5,000. Your account is at $6,650. Now you can risk 3% per trade. You have 3% on this. So this grab right here is a 6% take. That's pretty good. You do 2 of those a week, you're on the 50 lot cruise, or the what we can call possibly the charter boat, right? You can grab 12% a week. You're going to be very, very fine in life. Okay, so 6% is not a bad pull from a single 2-to-1 trade. Anyway, just throwing that out there. Okay, so now we get so again, some group of people will be looking for a 2-to-1, and that will be it. I just wanted to lay this out here for you because I do want to get folks to go back this year. So the second half of this DMR that I intended to teach will start up with in next week's DMR, but that's really diving into our simple sheet, right? I want to get you doing this with a type 1 London pattern that is only on the 15-minute time frame. But I want to just express as clear as this chart is to you that if you go about that where you wait for the confirmation below the 13 on the M15 chart in order to get a 2-to-1 result out of this type of trade, you are going to have to weather this pullback more times than not. Once in a while you get lucky, you get the 2-to-1, but that's not the norm. Most of the time when you're entering on a 15-minute chart, you're going to have to weather this first correction and then the move down into the second impulse. It's just going to happen. But let's say, for instance, that 2-to-1 was not your flavor. Maybe 3-to-1 is your flavor. Well, fortunately, we did get a move after. Look at what happened here. And again, this is all about time, guys. You're breaking yesterday's low. You're not down into ADR yet, right? We haven't reached our full-out milestone. You're at tea time. That's a heck of a good time to take off. Why? Because it's most likely going to pull back. It did pull back. Came all the way back out here, which would have triggered many, many of these when you bring your stop loss into the range, right? You start choking up your stop loss, you get it into profit. That took out a lot of those people. And then finally it came down and tapped ADR. Right? But statistically it does this, and I want you to have this in the back of your mind that any run can turn into a move down to ADR. Right? So this would be what we would consider the deepest scale, if I'm going to use the proper terminology here, the deepest in terms of impulse 2s that run like crazy. And we can in fact call this the end of impulse 2, and this is impulse 3. Right? You with me here? Let's do that. Let's bring up this. But anyway, I want to walk this through. I want to hold that thought for a second. Okay, so this in fact was our 3-to-1. In order to get a 3-to-1, you had to wait for the third impulse. Heaven forbid, late in the day. Right? You're way late in the day. Okay, and then of course you get the inverted hammer at ADR, and then of course it inverts back, it turns back up. All right, but I wanted to just show this to you. Again, the napkin speaks for it. Right? There's your 1, there's your 2, there's your 3. Okay. So realistic expectations in this business. If you're taking a M15 type 1 London pounder, you've got to be able to weather this first impulse and be able to take your profit in New York session. On a 5-minute and a 1-minute, you could probably get all that out of this first impulse. We covered that last week. That was really clear that we covered that. But anyway, I want to just put this out there because there are going to be a certain amount of our traders that will be better suited to knock it into the 5-minute, knock it into the M1, just strictly trade the 15-minute type 1 London pattern, which is how Steve built his account, right? He'll say it to you when you ask him, how'd you build your account, 15-minute chart, what was your trade? Basically that drawing that my mentor drew for me, right? So this was what he did. This is what you can do. But you have to, maybe you go to sleep after the entry, right? And then wake up, and then in New York, you take the profits. So I'm leaving you with this idea of this 3-level type 1 London pattern. You've got the M15 variety, which is going to take a little time to play out. You have the 5-minute variety, which oftentimes you can grab the first impulse, but sometimes you want to hold for that second impulse, right? And then you have the M1 variety, which fortunately was illustrated to us here in the UC last night, right? Break of Asia range, W, outside of the Asia range, beautiful. Okay, so as we move on here into the coming weeks, we're going to change gears into essentially getting you prepared to make good on this, right? Good things come to those who get stuff done. And we're going to do it together. And we're going to walk through this. So type 1 London patterns and GU, not a bad place to start. Put them in there. Win, loss, win, loss, win, loss. We're going to dig into this next week. I want to make sure this stuff is really clear about how to do that. All right, so we're unfortunately out of time. It's crazy how this clock moves faster and faster as we go. But that'll be all tonight, folks. I really do apologize for those that want it to be an hour. I can't ever get these things an hour. I try my best, but I don't know what happens. Anyhow, so far, we're doing all right. If you need to sleep, obviously go to sleep. But if you want to join me for the pre-market, come on board. We're going to open that up in about 5 minutes as I get my charts together, and we'll look at the pre-market session for everybody. Until then, big hugs to everybody. Stay healthy, and more than that, stay wise. God bless everybody, and may providence be with all your trading choices. Good night for now.